Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining me for this segment, we have Max Jacobs, Head of Investor Relations at Russo Partners. We're going to take a look at opportunities within the biotech space. It's great to have you with us, Max. Welcome to MarketSite.
Thanks, Jill. Thanks for having me.
You got it. And, you know, biotech is historically a volatile sector. Is there a buying opportunity in this market right now?
That's a really hard question to answer, but I mean, my gut says not really. Biotech has had a really strong bounce the last couple months, mainly because generalists started coming in when it was at their lows, and that caused a lot of short covering by the hedge funds. But that seems to be rolling over right now. And then also, in the next couple months, I think because of this latest bounce, we're going to have a lot of supply coming on the market in terms of a couple hundred biotechs probably looking to raise capital. And I'm not sure there's enough capital, new capital, that's going to be injected to go around for all of them. So I think you're going to see it's going to get worse before it gets better, especially with the Federal Reserve where it is right now. Because, I mean, they're still increasing. And if you look in the past, like they stopped raising rates in 2000 and 2006. And you remember the bad news continued for a few years after that. And they're not even done raising yet. So, and biotech can't decouple from the rest of the market. It's a high beta sector where they're negative cash flow companies. And so, every time you increase rates, that decreases the value of those future cash flows.
Right. Well, it gets more expensive to borrow and to raise. And to your point, it just doesn't happen overnight when they raise interest rates. It takes a while for it to go through the system, so it could potentially be a longer-term thing here. So when do you see this turning around?
Well, I mean, worst case scenario, if you actually look at historically, it takes like 18 to 24 months after they stop increasing for, the economy and the market to bottom. That's, I think, worst case. I think, we might have a very sharp downturn at some point, and I think that might be the bottom. And so probably the next year or so, I think that's when that will happen. And that will be a pretty good buying opportunity because there is, some great fundamentals in the sector.
What types of companies do you expect will outperform over the next 12 to 18 months?
Well, I mean, right now, I think the commercial companies are going to do the best. So people who have actual products, because, I mean, they're viewed as defensive growth in this kind of environment versus, the rest of the sector, which is development stage and pre-revenue, which is just sort of like high risky and very speculative. So, I like, I think the mid-cap commercial companies will probably do the best. I like Coherus, which is a biosimilar company. They have a biosimilar Neupogen on the market, and they just got approval for their biosimilar Lucentis and Humira a little while back too. And so they're going to, just have new product launches, be able to, increase their revenue, I think get profitable, and they'll be able to use their existing sales forces. So they'll have high operating leverage.
Right, well, because they have the infrastructure in place, but what advice do you have for biotechs that are trying to navigate this downturn? I mean, they can only go for so long without having liquidity injected into the company. And to your point earlier, it's not as flush with liquidity as it may have been in 2020, 2021.
Yeah, I think a lot of them have gotten the message that they need to prepare for nuclear winter. So they've been cutting costs, en masse pretty much. They know it's not 2019 anymore. They can't just fund every little science project they have. So that's good. So now they're extending their runways. One I think big piece of advice I would give them is make sure you stay active, because one thing that happens is they get a little bit of a bunker mentality, and so they're like, investors don't care. So what's the point of going out there when no one cares what we're saying? Well, that kind of guarantees failure, and you don't really want to do that, and you don't want to be dead money in someone's portfolio. You want to be active. You want to have events such as maybe a key opinion leader webinar.
Right.
Go to investor conferences, medical conferences. Talk to the press. Just make sure people notice you, because otherwise people will forget you. They'll sell you for tax loss reasons or something. And you don't want that to happen. That's just going to accelerate the process downward. Right.
Well, plus you're in front of the press and you're in front of the investing community. It shows that you have some belief in the product that you're trying to either get approval for or you have on the market. Does this impact patient care at all? If we're light on liquidity, will that impact R&D and new product coming to market?
Oh yeah, it's definitely impacting R&D for the biotech sector. Mm-hmm. There's just not enough dollars going around, and I think you're going to see some delays and probably some promising pipeline products where they just don't have the money to fund them. But for the surviving companies that are able to consolidate, I think there's a lot of they're going to be able to profit from that.
All right, appreciate the insight, Max. Thanks for joining us on Trade Talks, and thanks for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.